The One Big Beautiful Bill Act, or OBBBA, promises no tax on tips. But is that really the case? And how does this affect your tax return? I'm a tax geek, and here is taxation of tips under the OBBBA. Oversimplified. The no tax on tips provision of the OBBBA is actually a tax deduction of up to $25,000 in tip income per return. So rather than call it no tax on tips, from here on out I'll refer to it as the tips deduction. There have been no changes to the tip reporting requirements. Your tips will still be included in Box 1 of your W-2, and your Social Security tips will still show up in Box 7. Starting in 2026, you may also see the amount of your qualified tips noted in Box 12 of your W-2 with the code TP. For the self-employed, there will be a place for tips on Form 1099 NEC, Form 1099 MISC, and Form 1099-K. Your tips will still be subject to Social Security tax, up to the Social Security maximum of $176,100. The entire amount of your tips will be subject to Medicare tax. These taxes will still be deducted from your wage income, as described in my earlier video, Tips on Taxes on Tips, which is linked above and in the video description. And depending on how your state calculates taxable income, your tips may still be subject to state income tax. There are over 70 customarily tipped occupations, with just some of these occupations being shown on the screen. Each occupation has been assigned a code, which, when the forms are finalized, will be entered on your tax return. If you receive tips in the course of your self-employment, your tips deduction is limited to your net income. Example, Carla is a rideshare driver. She had $17,450 in earnings, including $6,000 in tips. After she subtracts her vehicle expenses from her income, she has a net income of only $4,700. Her tips deduction is limited to that amount. If your adjusted gross income is over $150,000 or $300,000 for joint filers, the deduction is reduced by $100 for every $1,000 your AGI exceeds the threshold. To claim the deduction, you and your spouse must have Social Security numbers that are valid for work, even if only one spouse has tip income. The $25,000 limit is per return, again, even if both spouses receive tip income. And the deduction is not available to married persons who file separately. The deduction is limited to your taxable income after taking your standard deduction or itemized deductions. It cannot reduce your taxable income below zero. Example, Anne works as a waitress at the Awesome Waffle. She earned $28,500 in 2025, including $11,350 in tips. Anne files as head of household. She has no other income. Her adjusted gross income is $28,500, and her standard deduction of $23,625 is subtracted from that to arrive at $4,875. Her tips deduction is limited to the $4,875, bringing her taxable income to zero. The good news is that for people like Anne, the tips deduction does not affect her amount of earned income nor her adjusted gross income, so it will not affect any earned income credit or additional child tax credit she might qualify for. So now that we know how this new deduction works, how is it reported on a tax return? I'd like to introduce you to Schedule 1A, Additional Deductions. This form is where all the new deductions created by the OBBBA are calculated. Part 1 of the schedule must be filled out by everyone who claims a deduction on this form. This is your modified adjusted gross income. Unless you are excluding income from Puerto Rico or other foreign earned income, the amount on line 3 should be the same as on line 1. The tips deduction is calculated in Part 2. You report your tips from various sources on lines 4 through 6. Line 7 applies the $25,000 limit, and lines 8 through 12 apply the modified adjusted gross income limit described earlier. When line 12 is subtracted from line 7, you have your qualified tips deduction. This deduction, combined with any other additional deductions, are totaled on line 38 of Schedule 1A, and that amount shows up on line 13B of the 2025 Form 1040. So to show an example of how all this works, let's combine Carla and Anne's situation into a new taxpayer, Alma. Alma files as head of household. She works at the Awesome Waffle, where she earned $28,500, including $11,350 in tips. She also drives for a rideshare company, earning $17,450 in earnings, including $6,000 in tips. Her rideshare expenses, mainly vehicle mileage, were $12,750. The first step is the most complicated, determining her modified adjusted gross income. Before we begin, Alma must subtract her rideshare expenses from her rideshare income, showing a net income of $4,700. This net income is added to her wages and tips from the Awesome Waffle to give her a total income of $33,200. This needs to be adjusted by 1/2 of her self-employment tax on the rideshare profit, or $332. The result is an adjusted gross income of $32,838. This is entered on both lines 1 and 3 of Schedule 1A. On to Part 2. The tips from Box 7 of her W-2 from the Awesome Waffle are entered on line 4A. Since she received no allocated tips, the same figure of $11,350 is entered on line 4C. Her rideshare tips of $6,000 are limited to the $4,700 net income, so $4,700 is entered on line 5 and totaled with line 4C, giving her $16,050, which she enters on line 6 and on line 7, since $16,050 is less than $25,000. On line 8, she enters her modified adjusted gross income from line 3. Since her adjusted gross income is less than $150,000, she skips straight to line 13. This is her qualified tips deduction. Alma's standard deduction of $23,625 is added to her qualified business income deduction of $874 and her qualified tips deduction of $16,050. Since the total is more than her adjusted gross income of $32,868, her taxable income is zero and her tax is zero. The tips deduction reduced Alma's taxable income by $8,369. Applying her 10% marginal tax rate to that amount gives her $837 in tax savings. For now, this is all based on draft regulations and forms, which may change before the end of 2025. Additional developments will be noted in pinned comments and the video description, where you will also find links to additional resources and information. If you found this video informative, please give it a like and share it with anyone who could find it useful. Subscribe to the channel to see more oversimplifications of our increasingly overcomplicated tax system. And of course, your questions, comments, and suggestions are always welcome in the comment space below. Thanks for watching, and I'll be back soon with more of your taxes oversimplified.